You wake up at 5 in the morning. You scan 4 different time frames. You read the news. You check correlations. You review your journal from last night. You enter 3 trades before lunch. You tell yourself this is what professionals do. And somehow, by the end of the month, your account is smaller than it was when you started. You worked harder than anyone you know, but the market didn't care. Here's what no one tells you. The reason hard work backfires in trading isn't because you're doing it wrong. It's because effort itself becomes the problem. Most people believe that success in trading is built the same way success is built everywhere else. More hours, more focus, more discipline. But trading doesn't operate on the logic of effort. It operates on the logic of patience. And the moment you confuse the two, you start bleeding money without even realizing why. The problem isn't laziness. It's not that you lack commitment or intelligence. The problem is that your brain was wired for a different kind of work. In most areas of life, output scales with input. You study more, you retain more. You practice more, you improve faster. You work longer hours, you earn more money. That's the pattern your nervous system has learned since childhood. Your teacher rewarded you for showing your work. Your first job paid you by the hour. Your parents praised you for trying hard even when you failed. The equation was simple. Effort equals progress. And that equation got embedded so deep into your psychology that you don't even question it anymore. But the market doesn't reward activity, it rewards restraint. And your brain interprets restraint as doing nothing, so it panics. It tells you you're falling behind. It tells you that if you're not acting, you're not improving. It pushes you to do something, anything, because doing nothing feels like you're wasting the opportunity. And that's when the damage begins. Not from bad strategy, not from lack of knowledge, from the very instinct that made you successful everywhere else. Think about how you learned everything up until now. You learned to read by reading more. You learned to play an instrument by practicing daily. You got better at sports by showing up to every training session. You climbed the career ladder by putting in extra hours, by being visible, by making sure people knew you were engaged. Every single reward system you've ever encountered has told you the same thing. Presence matters. Consistency means showing up. Hard work means being active. And now you bring that same mindset into trading and it destroys you. Because the market isn't a teacher, it's not a boss, it's not even a competitor. It's a probabilistic system that doesn't care how hard you're trying. Let me show you 2 traders. Both started around the same time, both had the same capital, both believed they were serious about this. The first trader, let's call him Daniel, approaches trading like he approached everything else in his life. He believes in preparation. He believes in showing up. He wakes up early, sometimes before the London session opens. He follows 5 analysts on Twitter. He watches recap videos from traders he respects. He takes notes in a journal. He enters the market every single day because he thinks that's what commitment looks like. He tells himself he's building experience, that every trade, win or lose, is a lesson. When a trade goes against him, he sits down and analyzes what went wrong. He adjusts his stop-loss strategy. He tweaks his entry criteria. When a trade works, he doesn't celebrate for long. He's already looking for the next setup. He's always doing something. His screen time is high. His activity is high. His effort is undeniable. He tracks everything. He has spreadsheets. He knows his win rate down to the decimal. He's read 12 books on trading psychology. He listens to podcasts on his commute. He's in 3 different Discord servers. He feels like he's doing everything right, and yet, slowly, his account shrinks. Not in a dramatic blow-up, just a steady decline. A few percent here, a few percent there. He tells himself it's part of the learning curve. He tells himself he just needs more data, more screen time, more experience, so he keeps grinding. He adds a pre-market routine. He starts journaling before bed, reviewing not just his trades, but his emotional state throughout the day. He's working harder than he's ever worked at anything, and the market keeps taking from him. The second trader, let's call her Maya, started the same way. She also wanted to be good. She also believed in effort. She also spent her first few months glued to the charts, reading everything, trying to absorb the language of the market. But something shifted about 3 months in. She noticed a pattern. Her best trades, the ones that actually made her money, weren't the ones she worked hardest on. They were the ones she almost missed, the ones she placed and then had to step away from because something came up, a meeting, a phone call, an errand, the ones that didn't feel urgent, the ones where she wasn't watching every tick. Those trades worked. And the trades where she was fully present, fully engaged, monitoring every move, Those were the ones that bled her account. At first, she thought it was coincidence, but it kept happening, so she started experimenting. She cut her screen time in half, then in half again. She stopped reading the news every morning. She stopped checking what other traders were saying. She built a simple rule for herself. She would only trade when a specific condition appeared on the chart, not when she felt like trading, not when the market looked exciting, not when she was bored and wanted something to do. Only when her condition was met. Some days that meant she didn't trade at all. Some weeks she only placed 2 or 3 trades. She felt uncomfortable at first, like she was wasting time, like she wasn't really a trader if she wasn't trading, but her account started growing. Not in explosive jumps, just steady, quiet growth. Not because she got smarter, not because she found some secret indicator, because she got selective. Here's what's happening under the surface, in the architecture of your brain. Every time you open a chart, your brain releases a small amount of dopamine. It's subtle. You don't feel it as pleasure, you feel it as possibility. The market is moving, candles are forming, numbers are changing, something could happen. That possibility feels like opportunity, and opportunity feels like you should act. But dopamine isn't clarity, it's anticipation. It's the neurochemical your brain uses to make you pay attention to potential rewards. It's the same chemical that gets released when you scroll social media, when you check your phone, when you pull the lever on a slot machine. It doesn't mean something good is about to happen, it just means your brain thinks something might happen, and that's enough to make you feel like you need to stay engaged. This is the trap. You start to associate the feeling of being busy with the feeling of being productive. Your brain begins to crave that stimulation, the checking, the analyzing, the placing of trades, not because those actions are profitable, but because they satisfy the need to feel involved. You're not trading based on your system anymore. You're trading to feed a loop that feels like focus, but is actually just activation. Your prefrontal cortex, the part of your brain responsible for planning and decision-making, gets fatigued from constant stimulation, and when it's fatigued, your limbic system takes over. That's the older, more primitive part of your brain, the part that reacts, the part that seeks immediate resolution to discomfort, the part that can't tolerate uncertainty. So you start making trades that aren't in your plan. You start exiting positions early because you can't stand the tension. You start adding to losing trades because your brain wants to resolve the pain of being wrong. None of this feels irrational in the moment. In the moment, it feels like you're responding to what you see, but what you see is filtered through a tired, overstimulated nervous system. You're not seeing the market, you're seeing your own need for relief. This is why hard work backfires. You're not working toward an outcome, you're working to relieve the discomfort of inactivity, and the market has no obligation to reward that. In fact, it punishes it, because every time you act without an edge, you're giving away a small piece of your capital, the spread, the slippage, the commission if you're trading futures, the emotional cost of being wrong, the opportunity cost of not waiting for a better setup. Those costs don't feel significant in the moment. A few dollars here, a few dollars there, but they compound, and over time, the trader who acts more loses more. Not because they're less skilled, not because they don't understand technical analysis, because they're more active. There's a principle most people never consider. It doesn't have a formal name, but you could call it the threshold of relevance. It means that most of what happens in the market on any given day is irrelevant to your strategy. It's noise, movement without meaning. Price goes up 20 pips, then down 15, then up 30, then consolidates. If you're watching all of that, your brain will try to make sense of it. It'll find patterns, it'll construct narratives, it'll tell you that the market is building momentum or losing steam or testing a level. And some of that might even be true, but none of it matters if it's not part of your edge. Your edge, whatever it is, only appears in specific conditions. Maybe it's a particular structure on the daily chart. Maybe it's a liquidity grab followed by a reversal. Maybe it's a divergence between price and an oscillator at a key level. Whatever it is, it's rare. If it wasn't rare, everyone would take it and it would stop working. So by definition, your edge only shows up a few times a week, maybe a few times a month. The rest of the time, the market is just doing what markets do, moving, fluctuating, creating the illusion of opportunity. And if you're watching that movement all day, you will find reasons to enter. Your brain is a pattern recognition machine. It'll generate explanations. It'll find setups that look real, and you'll act on them, not because they're valid, but because you've been staring long enough that doing nothing feels like failure. Maya understood this before she could articulate it. She realized that the market doesn't need her attention. It doesn't care if she's watching. It's going to do what it's going to do whether she's there or not. Her edge only appears when certain things align, and those things don't align more often just because she's watching more often. So she stopped trying to catch every move. She built a rhythm instead. She opens her charts twice a day, once in the morning, once in the evening. She checks if her conditions are present. If they are, she trades. She sets her stop, she sets her target, and she walks away. If her conditions aren't there, she closes the software. She doesn't monitor intraday volatility. She doesn't check to see if she's missing something. She doesn't scroll through other pairs looking for action. She treats trading like a job with specific tasks, not a performance that requires constant presence.
This sounds simple, but it violates something deep inside most people, the belief that more effort equals more control. that if you're not watching, you'll miss something critical, that the market rewards those who are present, who are paying attention, who are engaged. But the truth is the opposite. The less you watch, the less you're influenced by irrelevant information, the less you're tempted to act on impulse, the less your nervous system is hijacked by the minute-to-minute noise. The more your decisions are based on structure instead of emotion. This is what separates traders who survive from traders who don't. Not intelligence, not capital, not even strategy. It's the ability to do nothing when nothing is required. And here's the part that makes this even harder. Doing nothing doesn't feel neutral. It feels like loss. There's a concept in behavioral psychology called omission bias. It means that people feel worse about harm caused by action than harm caused by inaction. If you take a trade and it loses, you feel responsible. But if you don't take a trade and it would have won, you also feel bad, but in a different way. The pain is less immediate. It's easier to rationalize. You tell yourself you'll catch the next one. But here's the trick. The market gives you far more opportunities to act than opportunities that actually fit your system. So if you're someone who hates missing out, your brain will push you to act more often. Not because the setups are better, but because the pain of missing a winner feels worse than the pain of taking a small loss. And that asymmetry destroys you over time. Daniel experienced this constantly. He would sit out a trade because it didn't quite meet his criteria. Then he'd watch it move in the direction he expected, and he'd feel like an idiot. He'd feel like he was too cautious, too rigid. So the next time something similar appeared, he'd take it, even if it wasn't quite right, even if something was off, because he didn't want to feel that regret again. And that trade would lose. And then he'd be angry at himself for not following his rules. He was stuck in a loop. Damned if he acted, damned if he didn't. And the only way out was to act more, to try harder, to be more present, to make sure he didn't miss the next one. But that just put him deeper into the cycle. Maya broke the loop by reframing what missing out meant. She started keeping a separate journal, not of her trades, of the trades she didn't take. Every time she saw something that looked like an opportunity but didn't meet her rules, she wrote it down. She noted what she saw, why she didn't take it, and then, a day or two later, she'd go back and check what happened. And what she found was striking. Most of those setups, the ones that tempted her, didn't work. Some did, but most didn't. And even the ones that worked often didn't move as far as she would have needed to justify the risk. She started to realize that her instinct to act, that feeling of missing out, was not predictive. It was just noise, her brain trying to protect her from regret. And once she saw that clearly, the grip loosened. She stopped feeling like she was missing the market. She started feeling like she was filtering the market. And that reframe changed everything. Now think about what happens when you ignore this, when you keep trading like effort matters. You start to notice patterns that aren't predictive. You develop superstitions. You begin to believe that certain times of day are luckier, that certain currency pairs are easier, that Tuesdays are better than Thursdays, that if you just move your stop loss 5 pips further out, you'll stop getting shaken out of good trades. None of this is based on data. It's based on your brain's desperate need to find control in a system that doesn't offer it. You're not learning, you're rationalizing, and every rationalization pulls you further from what actually works. Your journal fills with trades that didn't need to happen. You add columns, trade duration, market conditions, emotional state, news events. You think you're being analytical, but really you're just creating the illusion of progress. Because the more data you collect on bad trades, the more you're reinforcing the idea that the problem is solvable through more work. And sometimes it is. Sometimes you find a real leak. But more often, the problem isn't in the data. It's in the fact that you took the trade in the first place, and no amount of analysis will fix a problem that starts with action that shouldn't have happened. Your equity curve becomes erratic, sharp drops followed by small recoveries. You have winning weeks and losing weeks, but no real consistency. And you tell yourself you just need to work harder. So you do. You add another indicator, you test a new time frame, you join a mentorship program, you buy a course, you start backtesting. And all of this might be useful, but if the underlying issue is overtrading, none of it will help.
Because you're not solving the root problem, you're decorating around it. The traders who break out of this don't suddenly become smarter. They don't find some magical edge that no one else has. They become quieter. They stop confusing activity with effort. They realize that real work in trading isn't about how much you do, it's about how much you resist doing. It's about sitting in front of a screen, seeing something that looks like a trade, feeling that pull, that itch, that whisper that says, this could be the one, and choosing not to act. It's about letting that moment pass. That resistance is the actual skill. Everything else, all the technical analysis, all the backtesting, all the journaling, that's just preparation for that moment. The moment when you have to choose between what feels right and what is right. And that moment happens over and over again. Every day you trade, you face it multiple times. Most people think discipline is about forcing yourself to do something hard, but in trading, discipline is about forcing yourself to do nothing. And nothing is the hardest thing there is, because nothing doesn't feel like progress. It doesn't give you feedback. It doesn't light up your brain. It just sits there, empty, uncomfortable, and your entire psychological history is screaming at you that this is wrong, that you should be doing something, that effort is how you win. But in this one specific domain, effort is how you lose.
Let me take you deeper into what's happening neurologically. Your brain has two systems. Daniel Kahneman called them System 1 and System 2. System 1 is fast, it's automatic, it's intuitive. It's the part of your brain that recognizes faces, that completes the phrase bread and, that flinches when something moves in your peripheral vision. System 2 is slow, it's deliberate, it's effortful. It's the part that does math, that thinks through complex problems, that overrides your initial impulse. In most of life, System 1 is incredibly useful. It keeps you alive. It lets you navigate the world without having to consciously process every single input. But System 1 is also where your biases live. It's where your pattern matching goes wrong. And it's what takes over when you're tired, when you're emotional, when you've been staring at charts for 6 hours. When Daniel trades, he thinks he's using System 2. He thinks he's being analytical. But after the 3rd hour of screen time, his System 2 is exhausted, and System 1 takes over. And System 1 sees patterns everywhere. It sees a double bottom and thinks reversal. It sees a breakout and thinks momentum. It sees a pullback and thinks opportunity. None of these are wrong in themselves, but they're not based on his actual edge. They're based on what his brain has been conditioned to recognize. And his brain has been conditioned by seeing thousands of charts, by watching hundreds of trades, by absorbing narratives from other traders. All of that creates a web of associations that fire automatically. And when those associations fire, they feel like insight, but they're not insight, they're just activation. Maya, without knowing the neuroscience, learned to work with this. She limited her exposure. She didn't give her System 1 enough time to take over. She made her decisions when she was fresh, when her System 2 was still online, and then she removed herself from the environment. She didn't try to rely on discipline in the moment. She structured her day so the moment never came. She didn't test her willpower against the market. She just didn't give herself the option to act impulsively. This is a completely different approach. It's not about being stronger. It's about being smarter in how you set up the conditions. There's another layer to this, the role of identity. Most traders don't realize that they're building an identity around being active. They start to see themselves as someone who trades. And if you're someone who trades, then not trading feels like you're not being yourself. It feels like you're failing at the thing that defines you. This is especially true if trading is something you've told people about, if your friends know you trade, if your family asks how the markets are doing, if you're in communities where people share their trades. All of that creates social pressure to be active, because if you're not trading, what are you doing? How do you explain that you're a trader who didn't trade this week? Daniel felt this acutely. He joined a trading group. Every day, people posted their setups, their entries, their exits, their wins. He felt like he had to contribute, like if he wasn't posting, he wasn't really part of the group. So he'd find something to trade, not because his system told him to, but because his identity required it. And every trade he took for that reason cost him money, but it bought him something else,
belonging, validation, the feeling that he was in the game. And for a long time, that feeling was worth more to him than the money. Until it wasn't. Until he looked at his account and realized he'd paid thousands of dollars for the privilege of feeling like a trader. Maya didn't have that pressure. She'd kept trading private. She didn't talk about it with friends. She didn't post in groups. She didn't need external validation. Her only feedback loop was her account balance, and that made it easier to be honest with herself. When she wasn't trading, she wasn't failing. She was just waiting, and waiting didn't threaten her identity, because her identity wasn't built around activity. It was built around results. Over time, something shifts for the traders who figure this out. The behavior stops feeling like discipline. It starts feeling like identity. Maya doesn't see herself as someone who's trying not to overtrade. She sees herself as someone who only trades high-probability setups. That's not a rule she follows, that's who she is. And when a behavior becomes part of your identity, it no longer requires willpower. It becomes automatic. You stop fighting yourself. You stop negotiating. You just act in alignment with the person you've become. This is the part most people miss. They think trading is about finding the right system, but the system is only 10% of it, maybe less. The other 90% is becoming the kind of person who can follow the system without interference. That transformation doesn't happen through effort. It happens through repetition, through choosing the same thing over and over until it's no longer a choice, until your nervous system stops interpreting stillness as weakness. And here's the paradox. The less you do, the more you learn. Because when you're not constantly acting, you can actually observe. You can watch how the market moves without being emotionally involved. You can see patterns over days and weeks instead of minutes and hours. You can start to develop a feel for rhythm, not the kind of rhythm that gets taught in courses, the kind that only comes from watching without agenda, from being present without needing to participate. That kind of learning is deeper. It's slower, but it's what builds real intuition, the kind that doesn't come from pattern recognition, the kind that comes from understanding context. Daniel never got there. He was too busy doing to see. He would watch the market, but he was always watching for something, an entry, a confirmation, a reason. He couldn't just observe, because observation without action felt like wasted time, and so he never developed that deeper sense. He could tell you what an ascending triangle looks like. He could explain the difference between a flag and a pennant, but he couldn't tell you when the market felt heavy, when it felt light, when it was coiling, when it was drifting. Those things can't be learned from a book. They can only be felt, and they can only be felt when you're not drowning in your own need to act. Maya learned this slowly. She started to notice that some days, even when her setup appeared, something felt off. She couldn't explain it. The structure was right, the volume was right, everything checked out, but it didn't feel right. At first, she ignored that feeling. She took the trade anyway, and more often than not, it didn't work. So she started trusting it, not blindly, but as an additional filter, and her win rate improved. Not because she added some new technical tool, but because she'd spent enough time observing that her subconscious had learned things her conscious mind couldn't articulate. That only happens in the space between trades, in the waiting, in the nothing. Let's talk about what happens to your account over a longer time horizon, because this isn't just about individual trades, it's about compounding. Most traders think about compounding in terms of gains. If I make 10% a month, after a year I'll have made so much. But they don't think about compounding in terms of losses. Every time you take a trade that doesn't meet your criteria, you're compounding in the wrong direction. You're not just losing the money from that trade, you're losing the opportunity cost of that capital. You're increasing the size of the hole you need to climb out of. You're reinforcing a pattern in your brain that makes it easier to take bad trades in the future. This is where hard work becomes truly destructive, because hard work in the traditional sense speeds up compounding. If you're doing the right things, that's great, you get better faster, but if you're doing the wrong things, you get worse faster. Daniel was compounding his mistakes. Every day he traded, he reinforced the loop. Wake up, analyze, trade, review, repeat. The loop felt productive, but it was productive in the way that digging a hole is productive. You're doing something, you're making progress, but the progress is in the wrong direction, and the harder you work, the deeper the hole. Maya was compounding in the other direction. Every day she chose not to trade when her setup wasn't there, she reinforced the right pattern. Wait, evaluate, act only when conditions are met. The compounding wasn't visible in her account at first. It was visible in her psychology. She became calmer, more patient, less reactive, and that internal compounding eventually showed up externally. Her equity curve smoothed out, her drawdowns got smaller, her wins got bigger, not because she changed her targets, but because she was only taking trades that had room to run. She wasn't cutting them short out of fear. She wasn't managing them to death. She set them and forgot them. And that only works if you're actually taking trades you believe in, not trades you're taking because you feel like you should be trading. There's a concept in ecology called carrying capacity. It's the maximum population size that an environment can sustain. If a population grows beyond carrying capacity, it crashes. The environment can't support it. Trading has a carrying capacity too. Your edge can only support a certain number of trades. If you take more trades than your edge can support, your account crashes. It might not happen all at once, but it happens. The problem is that most traders don't know what their carrying capacity is. They don't know how many trades their edge can actually handle. So they trade as much as they feel like trading, and they wonder why their results are inconsistent. If you trade 100 times a month and your edge only appears 10 times a month, then 90 of your trades are random. You might win some of them, but over time, those 90 trades will bleed you. They'll create noise in your results. They'll make it impossible to tell what's working. And you'll keep adjusting, keep tweaking, keep trying to fix a system that isn't broken. The system is fine. You're just using it in conditions where it doesn't apply. That's not a system problem. That's a discipline problem. But it's not the kind of discipline that more effort fixes. It's the kind that less effort fixes. Let me give you a different frame. Think of trading like farming. A farmer doesn't work harder by planting more seeds than the land can sustain. That doesn't lead to more crops, overcrowding, competition for resources, lower yields. A good farmer plants the right amount for the right land, then waits. The waiting is the work. The waiting is where the growth happens. But it doesn't feel like work. It feels like doing nothing. And if you're a farmer who's been trained to believe that effort equals output, that waiting will drive you insane. You'll want to dig up the seeds to check if they're growing. You'll want to add more water, more fertilizer, more something. And every time you interfere, you damage the process. Trading is the same. You plant your trade. You've done your analysis. You've set your levels. Now you wait. The market will do what it does. Your job is not to interfere. But that feels irresponsible. It feels passive. So you check on it. You move your stop. You take profit early. You add to the position. You're farming badly, not because you don't know how to farm, but because you can't tolerate the discomfort of waiting. And in a world that rewards constant activity, that discomfort is almost unbearable.
Here's what most people don't realize. The discomfort doesn't go away. Even traders who've been doing this for years still feel it. The difference is they've learned not to act on it. They've learned that the discomfort is just information. It's their nervous system saying something is uncertain. And uncertainty is fine. Uncertainty is the entire game. If there was no uncertainty, there'd be no edge. The price would already reflect all available information. You'd have nothing to exploit. So uncertainty isn't the enemy. Reactivity to uncertainty is the enemy. And the only way to reduce reactivity is exposure. You have to sit with the discomfort enough times that it becomes familiar, that it loses its power over you. Daniel never got there. Every time he felt uncertain, he acted. He told himself he was being proactive. He told himself he was managing risk. But really, he was just soothing himself. And every time he soothed himself by acting, he reinforced the loop. Discomfort, action, relief. Discomfort, action, relief. His brain learned that action is how you resolve discomfort, and that made him dependent on action. He couldn't sit in a trade without managing it. He couldn't sit out of the market without feeling like he was missing something. He was trapped by his own need for resolution. Maya learned to sit with it, not because she's naturally more patient, but because she'd hit a point where acting hurt more than not acting. She'd lost enough money from overtrading that the pain of another bad trade outweighed the discomfort of doing nothing. And once that flip happened, once the cost of action became clear, it was easier to choose stillness. She still felt the pull. She still had moments where she wanted to jump in, but she'd learned to pause, to let 5 minutes pass, to close the chart and come back later. And most of the time, when she came back, the urge was gone. The setup had either played out without her, or it had invalidated. Either way, she was fine. And that taught her something crucial. She didn't need to act. The market didn't need her. And that was liberating. So if you've been grinding and your results haven't changed, maybe it's not because you're not working hard enough. Maybe it's because you're working in the wrong direction. Maybe the next step isn't another strategy.
It's fewer trades, longer gaps, more silence. One simple shift. Instead of asking yourself what trade you should take today, ask yourself if you need to trade at all. And if the answer is no, close the charts, walk away, let the market move without you. That might be the hardest work you've ever done, but it's the only kind that pays. Because trading isn't about how much you do, it's about how much you don't do. And the moment you understand that, the moment you stop fighting the market with effort and start working with it through patience, everything changes. Not overnight, not in some dramatic transformation, but slowly, quietly, the way real change always happens. Your account grows, your stress drops, your clarity increases, and you stop feeling like you're at war with yourself. You stop feeling like trading is this constant battle between what you want to do and what you should do, because what you want and what you should finally align. And that alignment, that's what every trader is actually looking for. Not a perfect system, not a guaranteed edge, just the ability to act in your own best interest without having to fight yourself to do it. And maybe, if you're lucky, you'll look back a year from now and realize you didn't work harder, you just worked smarter. You didn't do more, you did less. And that less was everything.